AI is a great resource, but it's unreliable. You still need human intelligence to oversee it. Like they make mistakes all the time, but it's definitely an asset. It will become even better. We may discover some, parallel universes. We'll be walking around in space and frontiers and stuff. Okay. Updates. Let's look through the account. Any zero DTEs for me? I don't want zero TTEs. No. 2 DTE. What is that? SPX. No, I thought I closed that today. Okay. Recently, I gave a credit call spread by mistake. 5 days ago, I sold a credit call spread, collected $60, thought it was a $5 wide spread, only to remember it was 10 at 57.40 SPX for 2 days from now. It's like $15 to close. I would close it. It's just not worth the risk. That will release like $980 worth of um, margin requirements. It's only 2 days, but imagine leaving, like, you wouldn't open a trade that pays $15 and risks $985, would you now? No, so don't leave it open. As, quote, safe as it is, we have so many catalysts. It's just crazy to keep that open. And it was a mistake. All right. Drum roll. This is where we went on the S&P today, and I said coming here is one thing, going through here is another thing. Okay, so when you go here and you fail and you come back, now you've gathered more soldiers. Think about it that way. So they may have more momentum, but they did drop lower. So they made they stomped their foot on 549.60, 70. That dashed orange line. Look at this right there. So now they have solid footing. Oh, look at this. It matches this box perfectly. I don't remember how I drew this box, but I'll trust it. And now we're making a higher high. So they have a little bit more force. But this spot right here is a high point of volume from the overnight session, and they're cutting right through it. So one of the big guys must be rallying big time. Meta. So now we have the mega caps right there trying to attack yesterday's fail. Yesterday's open candle right there it's got a high and a low, and I put a box around it. This is about the center of it. This is the overnight high fails. Okay, now I know what that orange line is. So that orange line coincides with that head and shoulders that brought reds yesterday. Remember that dropped us? That's the neckline area. Very important development. So suddenly now the bulls have the advantage. From a chart perspective, they do have a problem, but they have the advantage. Yesterday's high 5578.75 on the ES. Yesterday's high 553.55 is an inch away. 553.55, that green line right there. And they're coming at it and not even slowing down. Now this guy is coming at it too. So who's breaking out? XLV is doing well. I don't think the XLF is doing well. So somebody is going bonkers. XLI. Nope. XLP. XLP. Weird. Like Coca-Cola rallying back. XLE maybe. Energy stocks. It must be XLK or XLC. Come on, TradingView. What is going on? Resistance zone, yes, but they're coming at it with fervor. So XLK, those are tech stocks, and XLC. So if now you feel like I need to own a call, check yourself. When you feel hasty, chasing a call. Stop, look left, walk away, get a drink of water, come back. Okay, so let's check on the premiums. So now the credit call spread gathered some heat. Earlier was too cheap. So the credit call spread now is 75, the original one we mentioned at 55.85. The delta is 18. That's appropriate. Earlier it was too cheap. Altogether, the trade is still evenish. The iron condor is still about the same price, so there's no need to panic. The VIX collapsed into the lows of the overnight. So now everything makes sense. This move up in the indices, the VIX reaction, the VIX futures is holding better than the VIX. There's that discrepancy. I have a bearish indication as far as SPY versus Bitcoin. Yes, I do have that. There is a study that tracks how stock market, SPY specifically, trades with relation to Bitcoin. It's something I started watching recently from funwiththinkscript.com. I don't know how much they charge for it, but if it's cheap, it's not a bad indicator. Like it flashed bearish overnight when the stock market dipped. It flashed bullish when overnight we popped. It didn't flash bullish here, so it missed that. It just measures how the SPY is performing relative to Bitcoin. I know it sounds silly, but it isn't. Okay, if you're new, let me know so I can walk you through everything. The S&P has a range so far, and we're within the range of the overnight and pretty close to the range of yesterday. We're closer to the top end of the range from yesterday than we are to the lower ends of the range from yesterday. So the bulls, you can say, have a slight advantage there in that perspective. I would not buy calls here with confidence. Thank you, Arthur. I see you. Yeah, you close your bearish positions, so now you're starting to make decisions that are proper. Is it because that your feet are against the fire as we put you against the fire in here? We don't hold back. David. Can you rephrase, David? Are you the same David we chatted with this morning? Crowd calls paying. CRWD, 3 minutes. Where has been CrowdStrike? Oh, near the highs. Interesting trade. Yeah, definitely. That stock is nuts. Oh, what happened to Twilio and Zscaler? One of them reports this week, no? Look, they all look the same. It's the same trade. They have identical charts. Is that the XLK? It is. So you can trade crowd cheaper by using the XLK. David, do you see my note? So I have a rule to myself. If I have a trade and it goes sour on me, if I get a hatch, somebody opens the hatch, come, I take it. I totally do. So sometimes you regret doing it, and other times it's God gift. You take it and you say, all right, it wasn't perfect, but thank goodness that happened. Coca-Cola spiked overnight, collapsed overnight, and now back to flattish green. I will stay short. I'm not losing money on it, so me? You? No, why? I don't talk to Rodrigo about anything of people. Okay, BC, good. Bull flag on Apple. What time frame? No, but he no, I did not. You specifically, no. Something of that was mentioned, but not you specifically. Not worth it, man. Not worth it. I know we don't trade headlines, but last night I was like, why is California election not causing a dip? Oh, Canada election. Maybe they're happy with the outcome of having somebody leave. Yeah, well, what's going on? Update me. When will we know and who's running? Is it the guy that was eating an apple that one time? He sounds reasonable. Oh, I wouldn't say that, Dave. The minority government won? Wow. So more of the same continues, right? Yeah, that's not good for Canada, I don't think. I don't know. I don't know enough, actually. But it shouldn't affect the stock market in the US because Wall Street cares about what scares Wall Street. And I think they know if the continuation of a government, um, actually, if there is continuation of the policies that are in Canada right now, then there's no new question mark for stocks. That's what they care. If the headline brings about question marks, then they care. It's not like they don't care about Canadians. It's just they don't care about the pocketbooks of the companies inside the S&P. Yeah, if you don't see the money, then you can go after your credit card bill. No, I would not. I would not. I mean, I don't know what you're asking me. Just rise above that. You're better than that. No, no, no. I don't think that the Canadian elections is a risk to the business of Wall Street. Canada and the US are will not will not be enemies anytime soon. We're joined at the hip, literally. New payment play. Not immediately. No, you're here this week. I will keep the password the same early next week. Um, I want to ask you to be courteous about something. The inner circle chat on Benzinga includes thousands of people that have never been in here. So let's not hash it out in there, okay? And be respectful from the standpoint of personal pushes against one person or another that you may have dealt with in Benzinga. Like, it's not that person or that person's fault, okay? It's just a policy that came up and a business disagreement. So nobody did anything nefarious. Okay, David, can you hear me? This is not David B, right? Because I spoke to David B earlier today. I just want to make sure. I don't think David can hear me. Okay, so you can hear me. Simple Stocks is its own entity, different than Benzinga. I was providing the live room to Benzinga users, and then that agreement broke off. So what the change is, Benzinga loses the front door to the live room. That's the only change. The live room continues. The front door is at simplestocks.com. So if you're a member there, then nothing changes. If you're a member of Benzinga, yes, David. If you're a member of the Benzinga, then and you want to still stay in this room, you want to join simplestocks.com if you want. Nothing else changes my contribution in Benzinga. The write-ups minus the live room link will be there. The trade ideas, 3 a week if I can, if they're available, will be there. The inner circle chat over there will be there. I will have a meeting once a week that would also be there, but this live room will not be there. It's a longer story than this. It's just I don't want rules in this room that is mine. If it was their room, they could lock it up, couldn't they? But they can't. So it's our room. Who's got the front door key? We do. So they're not claiming it's their room, but they acted like it was their room. And I took offense to that. Is from when? This week, officially, they told me they want it to be the last week. I told them how, let's make this as organized as possible because there are hundreds of people that come in here. We have 700 people that come in here, 500 to 700 people every day. They rotate in and out. You only see 300 at a time, but so this week we're here officially. And for the transition period, I may keep the password the same for Monday. So then if there's confusion, people will have a place to come in and say, what happened? Some people might be out this week. Longs at 55.70. That is a good idea because look what we approached the dashed orange line. Look how well they bounced off of it. You see on my screen? 549, 60, 70, whatever, that dashed orange line. They defended it really well earlier. They're not defending it really well now. That's interesting. And you know what happened? I said there was a discrepancy between Bitcoin and SPY, said short. I don't want you to file any SEC complaints against them. Please don't make me part of this. Please, please, please. This takes a tumbleweed that grows and it just mows down everybody. Please do not do anything. I listen. I subscribed to many things before and I didn't get my money's worth. Never once did I go and sue the company or anything like this. It's much simpler than this. They have an amazing set of offerings. The only thing you're losing is the live room. So please, that is above and beyond. I am not leaving Benzinga. I am not leaving Benzinga. Pete, why would you do this, man? This is just above and beyond. My goodness. How much is the cost to join Simple Stocks? 90 a month, 89 a month, 236 a quarter, or 830 a year. It's peanuts comparatively. I'm here 9 to 10 hours a day, every day, talking my head off. No, you don't get the Discord. The Discord is its own entity. The sources there are so many other experts in the Discord that do full blown write ups, and they're hedge funds on their own. The Discord is its own thing. It's worth every penny. As a trader, I would have a live room, this one, and a Discord resource, and I pay for Trading View, and I would pay for Bookmap definitely, and I would pay for Traditix definitely, and I would pay for somebody that knows how to read the options. All these things stream in the Discord as part of the Discord memberships. Not to mention the write ups from Raghu and Climber and whoever else wants to contribute in there, and the camaraderie and the AI bots that spit out unusual options activity, spit out trade ideas, spit out crypto chatter, dark pool levels, algo flow. What else do you want? So, as an investor, an active investor slash trader, it's okay to spend hundreds of dollars a month on memberships to get you better. If you think about it, you pay $90 for a room that produces results once a week. Nice work, Ryan. Once a week, you can make that money. And the amount of learning that happens here. So forget the trading. Let's say I don't have any money to trade. How about a school that costs $90 a month that teaches you an extremely high level of trading? Just forget the money you can make here. How much would you pay for a school a month where you can pop into the class and say, teach me something today, and then you leave? Just tell me what that's worth. That's no trading, just a school. Not to mention the comedy. I mean, the dad jokes in here. Who's yelling? No one's yelling. You're hearing voices again? Lebanese stand up. That's funny. Nick, can you give me your analysis on the volume on 0DTE SPY options 555? Okay. That's a specific question. Let me check. The options are well organized where we are. There's an unusually active 545 put option. We are where we need to be with regards to options. On the XSP, there's unusual activity around $3 lower than here. Like there's heavy volumes down there, 1,500 contract versus 500. You know, that's 3 times the normal. The heaviest put on the SPX today is 5,900, which is $15 lower. I'm sorry if I'm missing some messages. The stream is fast today. I am missing messages. So Bill, did I finish talking to you? You scrolled off the page. If you added Discord to the live BZ room, we don't have the live room. Okay, so the Discord you wouldn't have added to the Benzinga. The only front door to this room, Doug, the only front door from next week on out, there's only one door to this room, simplestocks.com. Simple as that. Benzinga is its own entity. It continues as it is with no live room. Everything else stays the same in Benzinga. Oh, bit of dish. I saw your kid with the water challenge. That was pretty cute. Andrew. I can tell he's a neat kid. He did not like being wet. He's smart. And the Discord is a completely different entity that has amazing resources. So being a member of the Discord does not bring you here. The only front door, no side doors, no back doors. The only door there is the simplestocks.com. And it is reasonably priced. It's not priced to make money, it's priced to sustain itself with growth. I need to invest in tech and people in order to make it better for us so we can beat Wall Street. The lifetime Benzinga membership continues without the live room. All right, folks, I'm going to table this conversation for now. We can pick it up later in the afternoon where there's a different group of people so we can have more. Let's trade. So we're at the orange line. Some people are taking calls. The people that are taking calls, I want to warn you that the burst higher was super healthy. And look at the group in the middle of my screen on the right. That is 30% of the S&P, and it's looking like it wants to break down. This one here. Hold tight stops on your calls. Okay, it's not wrong to be in calls here, but I'm going to put a line on the chart. A circle, that yellow circle should present some sellers. Let's see if they show up. And the yellow line. So now yellow is resistance on your screen. Orange is the opportunity to get long. If you're fast enough to scalp calls from here to there, what does that mean? Scalp calls. You buy a call that expires today. That's what it means to scalp calls. I usually buy it at the money, expiration today in the SPY. The SPY is pretty liquid. So 550 call would have cost you about $180 maybe. So maybe you're up $20 already. I'm not that fast. For me, I would have foregone that call and I would have bought a put in the circle or as we approach the circle. Who? Deer stacking on tariffs? Trump to sign EO on auto tariffs? What is EO? You made 90% on the put? High five. Nice work. I missed that entry. Can you look at Spotify? Yes. An iron condor on Spotify. Woof. Oh, no. I first have to go tell you the iron butterfly. What happened to that? You made $500 on the iron butterfly. I bet you had more early today. And you made $300 on the other one. $50 on the other one. 50 out of 200. But the first one paid $450 to $500 per contract. If you took the iron butterfly on Spotify, you won. Move on. And you want an iron condor. What period of time? Two weeks out. Okay, I can give you one, but I don't know anything as to why you would want. Why do you think it's range bound? What's your thesis? The stock just reported earnings, and it's moving 8% down. It doesn't inspire an iron condor. It inspires a credit put spread to catch the falling knife. The company grew. An iron condor, huh? Okay. It pays well wide range. I don't think you're understanding that the way it is. I'll give it to you though. How about May 16th? It's a monthly expiration, so it should be liquid. It is not a very liquid stock, by the way, historically, for me. So 495, you see, 490 is $10 wide. If you want $10 wide, you need to take 480, 470. If it pays 100, it shows 100, but so does 490. So if you want $5 wide, you have to step up to 495, which is a delta 16, and it shows $70. Credit put spread at 495, and a credit call spread. You're selling it at a discount. I don't like that. 620 or 615. 620 or 615. You get those numbers? All right. So if I bought calls, I would be scalping them here. How much would you have made? I'm going to guess you paid 180. You made $50 per contract. I would scalp here. What does scalping mean? I would book the $50 and forego whatever else it can pay me. Now, those who don't want to do that because they have some other reasons they expect 552 and 552.50 and 553.50 levels today, stay in your calls. For me, this price action here, the drop, the components on the right, inspire a stall. Thank you, Arlenis. Boeing, can we do a swing short from here? I am short Boeing. I don't remember how. Let me check. Yes, I would short Boeing here. I think I sold calls. Let me check. I remember doing something like that. There's Boeing. Yep. 240 December calls. What do you want to do? Swing short. Yes, you can. So multiple ways you can short a company. I don't recommend shorting a company the traditional way. The risk profile is infinite, and that's pretty scary. This stock is going into a prior fail, huge prior fail, huge overhead resistance that is pretty wide. So you short the stock, okay, you're doing it at the right time, but you're open to a lot of risk. So you can buy a put below, buy a put spread below, sell a call above, like I did, but I went way up to 240 and to the end of the year, so I don't have to revisit it every couple months. Or sell a call spread, or a combination of anything. So if I had sold a call and collected $600 and spent the $600 buying puts shorter term or put spreads, now I'm short with no money out of pocket. If it falls, I make money. If it doesn't fall, I may lose money on the sold call. Combinations of a credit call spread, otherwise known as bear call spread, and debit put spread is probably the least aggressive, because you collect some money, you leave some room, and you pay some money for an opportunity to make some money on the downside. If I don't have a specific exact reason to do it today, I would take half of a position to start, just in case I'm wrong. This price action is bizarre and disgusting. It's too volatile. It's too elastic. That's what I said this morning before the market opened. I said the VIX is too high for us to be this bullish. 4 days green, working on the 5th. And the VIX is too low for us to have this kind of elasticity. So they're not paying us for selling a lot of things. They're lulling us into this false sense of security. And the bulls and the bears are at risk of being snapped. Somebody's getting set up for the last 7 days. We will find out who after the fact. So whatever your conviction levels are, you should knock them down a level. They cut through the circle like it wasn't there. That's horsepucky price action. There is no way they should have done that. But there is heavy manipulation going on, and it's blatant. They're not even trying to hide it. They lost millions of dollars since Liberation Night or whatever the heck that was called, and they're still doing it. They're taking their revenge and lashing out at everybody. It's like they don't care anymore. There's no repercussions. So be safe. Take trades that are not zero DTE with conviction. And definitely not overnight risk with conviction. Like if you risk $3,000 on an overnight bet, I mean, where is that conviction coming from? Now, if you risk $3,000 holding a bet overnight, but it doesn't expire tomorrow, okay, I get that. But there are too many people comfortable going into the open with zero DTE, thousands of dollars of risk. So from the day before, I honestly don't know where the confidence come from. So they're up a lot or down a lot the next day. That's like a poker mentality. I don't have that. So stocks that are at risk, MSTR, breaking out when neither the stock market is or Bitcoin is. I think they report earnings soon. If you're chasing MSTR up as an investor, you should know that this here is not an obvious entry point. Technically, it is broken out, but this is a company that has no income and it's a balance sheet story. So they will love it, love it, love it, and then they'll spit it out like crap once they start hating it. Yep, earnings in 2 days. Oof, careful. I do have a trade on MSTR. I shorted it, and then I said, you know what? Let's do it in Iron Condor. So I have a very wide range on MSTR for the end of the year. I can't remember what it is. Let's go check it out. Okay, so here's my range on MSTR. Don't laugh. Oh, where is it? There. That's my range for MSTR for the end of the year. I make money if it stays in this box. Freddie, that sounds like something you would say. Awesome. The Iron Dragon. No, it's just a regular Iron Condor. If you have the margin, they'll pay you a fortune to sell a strangle, but that's pretty freaking dangerous with that stock. People are unreasonable with their love and hate about it. They either love it, love it, love it, or hate it. It's almost like Tesla on crack. Okay, so the range is set up where we have catalysts to the upside and catalysts to the downside. My impression is, look at my screen. The catalysts to the downside are spread out. Like you have a little one here, and another one lower. The catalysts to the upside are concentrated around the tops from yesterday. What does that mean? Higher lows, knocking on a roof. So the bears better not blink, because then you immediately have about this much of upside from here if they knock out the highs from yesterday. So the number was just under 554, which is like right here. Okay. Credit call spread for tomorrow. Let's check on that. Why not today? You've been stung. The credit call spread from this morning is still $50, which is unusual. Not extremely unusual, just slightly unusual. We have a lot of pressure already on options. Like if you look on the stream on the Discord, for those of you who are members of the Discord, you can see some downside pressure. Price is into the call side. You want price to come down to the middle of the road. So for example, on the Qs, if we drop to 471 and change from 473, that wouldn't surprise me. On the SPY, it's not a lot. We backed off a little bit. But on the QQQ, we have more. The IWM is really well put together right now. Okay. So see the IWM dip right here? Bottom right-hand corner of my screen. So check this out. This dip may create a snapback rally. Like look at yesterday's action. The IWM dipped and descending wedge snapback. So we have a descending wedge, and the snapback target can be 1976 RTY. So let's see if we can translate it. $1.5. So 195-ish, 195 and a half can ensue. Short-term comments. And then if they take out the highs like the ES, like the S&P here, if they take out this zone, they can accelerate higher. So yes, the scoreboard is red, but like I said, they're going down maybe to establish better footing. Levels on an XPI for when? I looked at it. It's not an attractive company to trade, to own, shrinking in sales. So are you trading it or what was it? One second. Tell me your time frame on an XPI. The Iron Condor is at 55.85. Credit call spread SPX expiration today, 5585. You should know that there was a credit put spread with that, and that's what we started with. The XLF, Lord have mercy. The XLF just flashed a potential target that's close to the highs of yesterday. So brace for impact. The XLV is looking to break out. That's another 10% of the SPY. So these guys have come back. Oh my God. They go from breaking down to breaking out in 10 minutes. That's gross. Here, these guys. So if I look at the ETFs, the XLV, no, that's not the ETFs. This one. XLF, upper left-hand corner. Let's go to 5 minutes. You see how they dip? They look like they're going to trigger a breakdown, and then they rally. But look at all these sellers up here in the XLF. Let's see if they can take him out. The XLV is slightly different. It's already bullish and looking to break out. That kind of looks like the SPY right here. So if this guy bumps, that's 10% of the SPY. The XLI is a smaller one. It looks like the XLF. These two are not yet threatening, but this one is definitely there. The XLP, gosh dang these freaking things, Coca-Cola and company. I mean, seriously already, let go of it. Materials, quiet like this one. Energy is not a factor. This one is basically Tesla and Amazon. The XLK, basically tech. All right. So now we know the players. At least they struggled inside the range, these two yellow things here. But they're too close to a breakout. Don't be comfortable being short. And the VIX is not frisky. So we are supposed to have a headline from Trump today. So I have a question. Who has ever known Trump to change his mind about anything? So I told you this scenario happened in 2018. And in 2018, not for a minute did we negotiate with China. People said things like they're saying now, oh, it seems like we're backing off and we're close to a deal. And China said back then, we're not talking to the US. We're not even in competition with the US. We don't care. We'll give up all of the tariffs. And they sent one guy, and he was like a journalist of sorts, probably. I don't remember him. And he came here for a couple of weeks and left. It was an insult. I thought the president should not have met with this guy back then. And it yielded nothing, and the tariffs went in as promised. And that's what's going to happen this time. There's no negotiations. No, but people have reported that we've dialed this back and that back. Has any of that been confirmed? I don't think so. And people reported that we're close to a deal. China is not dealing. They didn't deal in 2018. They're not going to deal now. That's true, Bill. He is admiring tellers from the 1980s. Yeah, so that's what I'm saying. There's nothing going on. China did not buckle last time. China just took the punch and walked away. They're losers for doing that, but they don't mind losing. The 145, he dialed it back. Is that a fact? What is it now? I don't think it is. I think it's one of his lackeys that's something along those lines. What went into effect? What is the fact? Stop with the opinions. What actually went into effect? You snooze, you lose. Ooh, that's good. Did you make that up? That's amazing. I like it. Yeah, not that I'm worried about it, but what actually went into effect? I'm sorry, I didn't see the message. No. Thank you, Sriram. Okay. Could you please put SPX back in the corner? Bottom right? Sure, absolutely. What time frame? 5 minutes? 3? We had it on 3 minutes. Will that work? Sure. I don't need the details. I want to know what the US imposed tariffs on. Something went into effect a couple weeks ago. What was it? You know, they kicked the can on 90 days on everybody else and imposed tariffs starting last week, I think. I honestly don't care. If we don't say the word tariffs for the rest of the year, I'll throw a party. I told you they won't matter when people, oh, party's over. Somebody said tariff. Cancel the party. I was going to have clowns and balloons. Party pooper, Jack M. Luis, you're off the hook. That took 15 seconds. Pink tutu. I would wear a pink tutu, yes. Somebody remembers. No, seriously, it's immaterial. I said, here's my take on tariffs. Business will find a way. They will find a way. Companies invest billions of dollars to sell their stuff. And when they're not able to sell their stuff, they will spend hundreds of millions of dollars to make it available through other venues. I promise you, they'll find a way. So there might be an adjustment period, but in the end, it's immaterial. If a company is successful, let's say Nvidia is not allowed to sell to country A or B, guess what? They will find a way to get it to country A or B if they're the only gig in the game. Just to use one. Now, I said there are some companies that will be hurt because they deal with one commodity or one product and it can be directly targeted. Yes, those are different. Like if I'm an aluminum seller and that product, that aluminum is taxed heavily and therefore becomes unavailable to an entire country, and that country is a big portion of my sales, that company will be hurt. But for the S&P, the tariffs is not that big a deal. Hi, Tom. Thanks. All right. We are stalled. The call's paid. The put's paid. The Iron Condor is working. The credit put spread paid. The credit call spread hasn't. I wouldn't mind being in either. I definitely wanted the credit put spread earlier, and I thought the credit call spread was worth it. I just put the scribbly yellows up there to remind you that it's a flat top above us. If we break out of the flat top, it could be a burst. Are you ready for the burst? It looks like the mega caps have stabilized. I'm afraid of the stinking Excel posse. These days, when they sell mega caps, they buy the Excel this and that. If you just want one example, take Coca-Cola this morning. They report earnings. First of all, they're near all-time highs with the most boring P&L ever. There's no growth here or there. They don't do vaping. They don't have anything going for them, except that it's a good company with good financials, very stable. And it's trading like it's Tesla going into the moon, introducing robots. So this morning, they report earnings, the spike, and then a crash, and then they recover, and now they're chasing the highs of the morning. It's emblematic of this risk appetite. This is an immature market. They're trading like toddlers. They want the bag of candy and they want to eat the whole thing until they get sick. And then they puke it out like they did in the correction. Extremely violent days until something breaks. And there will be one puke that they choke on and it will be a bad one. So you have to respect the upside because they're immature. Which is why my morning note said I am still defensive because nothing has changed. If you were worried 2 weeks ago, you should still be as worried now. Nothing changed. Just sentiment. How people feel changed. The tariffs are there, inflation is there, the GDP is what it is, unemployment is what it is. Nothing changed. The valuation of the companies are back to where they were roughly. Palantir back to 100 times sales, all-time high levels, just emblematic of the risk appetite. Bitcoin back close to 100,000. Nothing changed. 2 weeks ago was the end of the world, and now it's the beginning of a new era of upside. That's the sentiment on the street. This is me talking to you guys one at a time. That's what I'm gathering. You don't think it's a little bit strange that 2 weeks ago we thought the world was ending, and now we think that, it's a new way of, it's a new world. So I'm telling you, be open to being wrong. That's it. And that's what my morning note is. I'm looking to short. I need a good rally against good levels. I don't have that. I know we're up against good resistance level, but I don't trust it. So I'm not shorting here. I have very few specific shorts based on specific reasons, but my portfolio is bullish from the buying the dip. I'm not starting longs here. An XPI falling into support, I'm not touching that thing. I don't think it's worth my money. First of all, 200 has become a roof, and the support is iffy, and the fundamentals are not that great. Nvidia, I would be long Nvidia here, absolutely, as long as I can double my order at 75 or 70. If it doesn't go there, then I'm long. If it goes there, then I'm long with a better entry price. Microsoft, great company up here. I would own a starter position. It's still so close to $400, right? I used to say, I bet you Microsoft will give us an entry in the low 300s. I don't even remember if it went. Yes, mid 300s, 344, 345. That was a pretty good forecast on my part, right? It seems inconceivable when it was 410. It would drop below 400 for like a minute. Now it's struggling to get back above 400. So patience. I know I am missing a piece of the puzzle. I know that for a fact. So my conviction is humble, moderate. I'm not doing anything huge. And if I do, it's way out in time. The Bulls are in charge. You don't have to feel it. We've had 4 green days in a row. We rallied 14, 15% unhindered. You don't have to feel it. It is it. But we also fell 25% in a few hours, basically. I don't know if you realize it. We had a day where the market should have triggered stops, and it didn't. We fell more than 7% in one day on the S&P, and they didn't stop the market because I think it happened in the SPY and they used the SPX or vice versa. I can't remember. One of them fell 7.2%. They should have triggered a stop for 15 minutes, and that would have scared the bejesus out of the market. But, 10 seconds avoided that scenario. It's the Wild West. Respect it. Now this is inching closer to the high from yesterday. 553.55 on the SPY, 5578.75 on the ES. The Qs maybe look a little further. 475 flat, the high from overnight, which was higher than yesterday. That's unusual. So the SPY made its high yesterday at the open. The Qs made its highs last night after the close. Interesting. I don't have a short based on that divergence Bitcoin SPY yet. If I get an arrow and I see it in time, I'll let you know. These are fast comments. Let me check on my messages here. No, they reported already. They spiked to 73 and they fell to 70, and then now they're back close to 72.4. They already reported. No growth, just the boring ass company it is. Doug, yeah. You took a SPY put for tomorrow that I'll wait to monitor carefully. Yeah, but why are you bearish for tomorrow? What do you know? Why do you think we're going to fall tomorrow? We're like at the verge of a breakout. Why are you using a put for tomorrow? Are you using it to short today with tomorrow's puts? If you don't know, why are you putting your money at risk? Respect your money. What kind of an idea is that? It's too early to start using tomorrow's puts if you're trading for today. If you're shorting here, which you're fine shorting here, it's at the high from yesterday. Use today's puts. They're cheaper, more effective, faster to scalp. Later in the day, you can use tomorrow's puts. But I wouldn't decide that tomorrow is going to be red. I mean, why would we know that? Maybe you see something. Just make sure it's real. I know we have some headlines coming out soon here. Let me check. Emotional catalyst. So what's today? Tuesday. Tomorrow we have ADP before the market opens. ADP is the private sector jobs number. Tuesday. Wednesday. GDP. ADP. GDP should be the only thing that matters, right? PCE, that's inflation. Yeah, tomorrow could be hoppin' poppin'. Yeah, I didn't want to get you out of the put. I just wanted you to use the right utensil. And I meant it when I said why. Why? So my portfolio is green today, but I'm not compelled to do anything. So I look around, it's like, okay, what can I do today? I don't want to add to my shorts. I don't have any extra information. I don't have any compelling stocks that are falling. Maybe let me go on a different window and do a scan on what's falling. Maybe I can catch a knife I like. Spotify, definitely not. PayPal, maybe. Shrunken sales, which I don't like that, or at least no sales growth. Target, I think we go to 552.10 here on the 15-second harmonic. As far as higher time frame on the SPY for today, I mean 551.15, 551.20, the bottom of this yellow circle still is attractive, but the bulls did go above this Friday after hour spike. Remember Friday we were tracking an arrow, up arrow, and they fell just short. And then after the bell rang, boop, we had one spike to that arrow. That's the green line. And look how pivotal it's been since then. And we're above it. That's where that yellow hand drawn line is, marker. If we lose it, we will probably come down to the bottom of the yellow circle. The VIX futures are still more aggressive than the VIX itself. There's a discrepancy there. Hey, McDonald's is red. Sweet. I'm short. So HIMS, I don't think I'm being shown the right price. I'm going to open up a different trading platform. A platform I rarely use. HIMS. What is our trade in HIMS? Oh, okay. Implied volatility is through the roof. That's why. No, it's being quoted correctly. Okay, so the difference between buying a put to short the stock market here versus selling a call spread. I favor selling the call spread, especially if you make it in a way to it mirrors buying a put. Let me explain. So if I buy a put, only one scenario makes me money. The price goes in my direction, it falls, and quickly. The faster the better. Otherwise, I'm losing money. Every other scenario loses me money. If I sell a call spread, I'm saying maybe you drop, maybe you don't, but I know you're not going to go above that. And then I sell something there at that level, and I wait for time. So only one scenario, a super spike, will cause me to lose money. You can make the risk size about the same. About the same. You can spend $200 to $300 buying a put, or you can collect $150 selling a call or a call spread, risking $350. So, and you decide, okay, if I lose 100 on that credit call spread, I'm out. So if it goes to 250, you close it. It becomes an easier win. Now, the biggest difference is the amount of money you can make. That's the biggest difference. If I buy a put and I nail it and the stock collapses, I make a lot of money. If I sell a call spread, that's all I'm going to make, 40%. Who's going to be upset of 40% win? Not me. But yes, you would have missed out on a bunch. The price action is iffy. In a from the perspective of they're uncommitted. 1 minute they love something, the next minute they hate it. It is You have to be on your toes, and smaller size bets because of this wackiness in the market. The range bound is still what's working, and right now it is 0.7 for the iron condor from this morning. I'm going to guess most of it is on the credit call side. So if you did a credit call side, if you did an iron condor this morning, meaning you sold the put spread, you sold the call spread, and the credit put spread is only $10, and you're feeling bullish, like they're not going to fall and they're going to test you on the upside, you sell another credit call spread higher, or you roll up your risk. Don't sell two on top of each other. Close the other one, sell another one higher, collect another $40 or $50, and now you would have collected 150, 100, yeah, 140, $160, something like that. You reduce the amount of risk, but you increase your chances of losses. Okay, if I didn't answer a question of yours, that's because it scrolled off the page. It's been a busy morning. I'm going to put myself on pause and get some water, so I'll be on mute for a minute. So I didn't miss anything. CrowdStrike, let me check. Sorry, I had to catch my breath. Did a little workout. So CrowdStrike credit call spread. I don't mind it, but you should know that it could rally another 5 to 8% with no issues. Definitely. Definitely. Let's see if I can tell you how I would trade it. It's a good company to go long, but you could, depends on when it reports earnings too, soon enough. Early June, late May. June 3rd are the earnings, June 3rd. So if you want to short it with May 23rd and leave room, let's see, an 11 delta, will that pay you anything? What? Wow, yeah. So an 11 delta, they're quoting $100. That sounds sus. Yeah, there's no way it's 100, but if they pay you 100, that would be the one. So you're going to be up in the 485, 490 credit call spread area for May 23rd. You can come closer 1 week. Don't go out 1 week. That's one way to short it. Okay? Leave my baby alone. You would be leaving a lot of room for error. I would be comfortable with that credit call spread. That's okay. I said they would revisit the circle potentially, but there was support at that green line. So 550.3 is another target, and 549.7 is another target potentially, but they're falling into what they've established as being a support zone. Okay, so it is now the orange box. Now we can trade the orange box, which means what? Anything above 552.50, exit longs, enter shorts. Anything below the dashed orange line, exit shorts, go long. Trade the range of the orange box until, and that's the important point, they break out from it, out or down, up or down. Then you're going to go in that direction much deeper. If we break out of 553.50 on a closing basis, we can get $2 to $3 easy of upside, and vice versa. If we fall below 548.50, we can get $2 to $3 of downside. Until that happens, ping pong inside the box. So if you've got the orange, if you've got the iron condor, you're set. What is it now? $50. That's probably 40% of the maximum gains you collected. Some of you collect a little bit more. Um, you're in good shape. If you sold the credit call spread on top, you're making some money. If the credit put spread it was the only thing you took and it's too cheap, close it, book it, leave the money on the table. Don't buy calls as we approach 553. Don't buy puts as we approach 549. Less audible. Is that correct? Anybody else? My volume went down? No. Okay, thank you. So see if you can move around your audio levels on your speakers or headphones, wherever. Yeah. I may move my mouth away from the mic every once in a while, especially when I look behind me. So if I'm looking on the bookmap stream on the Discord, I see a lot of potential sellers at 5568, 5570 ES. So those are potential, what they call overhead supply. I wouldn't call them sellers because every seller has a buyer. If a transaction happened, when you buy shares, somebody sells the shares. You don't just pick them off the shelf. So when I say potential sellers, that's misspeaking. Transactors, volume, traffic jam equals resistance. $549.70 to 550.2 would be my target on this drop. There should be buyers at 550.5 potentially, like people who would be interested in getting back long. There's this one candle that sticks out, and this one, and it's about the same area here, just above this dotted orange line. You hear me do something that makes it 2 times louder. So I don't do anything technically different. I might step closer to the mic. I use a directional mic, like the ones they use on Hollywood, not one I can put in the room somewhere. Otherwise, you would hear every noise in my house. Can I go back 15 seconds? Yes. Why is TradingView so slow today? We switched back to 15-second charts. Now we can see a few more levels a little bit clearer. That one candle I mentioned is still it. It still bottoms at the dashed orange line. The collection of candles there too. The other one that I mentioned, we broke it up into several different pieces. So now we see a level of 550.48 or 550.5. Nobody has mentioned the QQQ today. If you want, we can track it. Middle right screen. They kind of look the same, to be honest. 473.20 can be next. 473.60 can be next, as long as they hold 471.40 on the QQQ. If they lose 471.40 on the Qs, we're probably losing 470.80 and 470.35 would be the target. Tesla levels. I gave levels in the morning. Was it to you or not? I said, are you ready to write them down? No, okay. So are you ready? Okay. On the downside, you have reprieve at 277. On the upside, you have resistance now at 287, 290, 295, and 298. If you lose 277, 275, and 270 are the targets. The extreme drop would be to 261. The extreme rally would be to 307. And when I say extreme, those are ranges that are within reach looking back 30 days. Tesla's done that in one day. Those are your lines. I don't see any patterns. Let me see if I can give you some patterns here. Okay, so the S&P can go to 553.4 if you picked up some calls. That's your upside. So anything above 552.50, I would scalp. If you just picked up some calls, I would scalp into this arrow. You have a lot of sellers at 552 too. 550. That yellow line is going to be difficult. But I see why you did that. Okay, back to Tesla comments. If you don't know what you're doing, folks, don't play around with Tesla. Whoops. Wrong one. Yeah, there's nothing easy. Yesterday's range in Tesla was massive, like massive. So you had a high of almost 300, you had a low of almost 270. So I'm going to tell you, if it loses 272, it goes below 260. And if it breaks out from yesterday's high, which I find hard to believe, it goes probably to 310, 312. QQQ, let's see what we can get you here. I'm going to show you something on the Qs that's pretty amazing. The reason why this is yellow is why I want to show you. The Qs also can bounce to 473.50 right now. Okay, the reason this is yellow, look how well they filled an open gap from before. Look, you see this? This was an open gap to the left, far enough back that they filled yesterday, and I forgot to show you. So we can unfill it, so we're not looking at this ugly yellow color all day. There should be sellers at 473.6, 7, something like that. I'll put a line here. All right. Pretty interesting day, price action wise. Let's talk about some stocks that are not trading super fast. I need to trade something slowly. What do you guys see? My gosh, the XLF has gone ballistic again. I don't know why that ticker pisses me off. Best Buy? Yeah, I'm not investing in Best Buy. What are you doing with Best Buy? Are you asking me or? I love it when I go to Best Buy and I want to buy something, which is like once in a blue moon. And if I have a question, I pick up something off the shelf. And if I have a question, that means it's not an easy answer. And I ask a question and the person says, let me see. And they take the thing from your hand. I was like, okay, this is where I just turn around and walk away. What do you think? I'm too stupid to read it and not understand it. And here you are, Your Highness, you're going to take it and read it and understand it and explain it to me? NOV. Well, it wasn't a trade. It was the statement that NOV is too cheap. Oh, no, hell no, no, I see. No. I suggested that if I wanted to invest in NOV, I would sell a put, buy a call. But the conversation was a lot deeper than this. I started by asking, why is it so low when the P&L is perfect? So I said, maybe you guys need to do some homework on the business itself. There must be something scaring investors away because the P&L is pristine. It's like picture perfect P&L, aggressive growth, profitable, not expensive, metrics wise, cheap, um, priced at 6 PE, price to sales. Are you guys seeing where it died? this bop. Do you see where I said 550, 250? I would take my calls out. You can rebuy those same calls if you want into this base from which they rallied before. But now I'm happy that markets are respecting trading well, like based on charts and not NVO. Yeah, NVO, Novo or whatever. The diet shot, not the oil company. What is it called? Novo or something? Anyway, definitely not an iron condor. I would own it as an investment, half position. If it gets cut in half, I'll add the second half. So Novo Nordisk. So it's Novo. We'll just call it Novo for short. Novo, the diet drug. Sounds like a series. Wait. NVO. It does have active enough options. So this is a trade that I would say, okay, I would want to go long to own shares. And I said, why don't I go to I'm going to go to a 9 delta for December and see what they charge me with regards to selling a naked put. $400. Wow, that is efficient. So you can collect more than $100 and they'll charge you $400. I don't know the company, so I'm hesitant to sell a put because I could lose $4,000, right, if it goes to zero. I'm not so sure I want to put my neck out. I mean, I did it in Intel at 13, so I would lose 1,200 if Intel went to zero, but I know Intel is not going to zero soon, or at least not on a headline. What if the FDA said, no more of these diet shots to anyone ever? That stock will get cut in half like overnight. So don't sell naked puts unless you know the business inside and out. That's why I said that. Okay. So how would you modify that trade? You sell a 40-30 credit put spread. So you sacrifice $50 and that spread is $100. So now your risk profile changed from I'm super long to $100 of income versus so you're risking $900. The risk profile changes. Maybe I'll do that. Let's see. Will it fill? I don't know. I'm going to ask for more just in case the quotes are wonky. It's way out to December. Give it up, dog. Clock out, man. Clock out. Is it falling today, Novo? No, it's up 3%. I'm pushing the envelope to see if it even fills at $90. It's way out there. No, the price is moving as I change the price, so clearly not very liquid, way out there. It does fill if you push the envelope. It filled at $87. NVO December credit put spread. I really wanted the courage to sell a naked put at 40, but I don't know the company. Hey, I'll take a $900 loss. So risk reward, it's 10% ish. Should be a snoozer. I'm not recommending it, but I'm testing it because some people are interested in going long it. And I said I would sell a put to buy a call. If you're looking to buy shares now, you're taking the risk now. You should be okay selling a put. I'm not okay because I don't know the company and the sector scares me. So, okay, so here's target 2 that I mentioned. And the best base for this rally that they had a minute ago is 550.5. A little bit lower, but let's go with 550.5. The QQQ are moving too fast for 15-second charts, so I'm going to moderate it up to 1 minute. The Qs can bounce, but they haven't. And if they did, they haven't been able to hold it. So you see how this one here was a good spot to exit. You can still reload your calls. We're still trading a range. You should know that the closer we get to 5, the orange dashed lines, the better the support for today. But you can assume that we're only trading the top half, the circle and above. That's also a valid assumption. So this bounce, if it goes above this large candle at 552.20, they may get to this one and finish the job. So it's not wrong to have bought a call here at 551. I just want you to watch that candle. Let me see if I can get you. Yep, 552.15 would be a place where they would hiccup. This price action is so technical. And then you get bursts of headlines that are not technical. Very tricky environment to risk a lot of money with confidence. Yeah, we're approaching covering the fair value gap on a 30-second chart. Now the question, will we lose this last bounce right here? So are we, I'm going to draw it and take it off. Are we selling rallies? And they don't have to touch, are we descending? You would answer that by going above this or below that. Didn't I draw a circle here? Could have sworn I draw a circle. The DAX is up almost 1%. Interesting. Deleted it? Huh. I did not hit delete. I must have hit undo. No problem. You guys know where it's at. So now the new range, the very short-term range, are these two bubbles. Red and green. This channel I drew is not tradable. It's a visual representation as to, hey, what's going on here? In fact, I'm going to delete it. We can replace it with this. I would say, hey, since 8 o'clock, since an hour and a half into the earnings, since the box, who's in charge, buyers or sellers? Sellers. It's a regression line. And it's period, like I chose here. Like I could have chosen it here. It'll adjust and draw itself. Again, not a tradable thing. It's a visual representation of the price action. I can see it, but some people need a visual aid. It's not a tradable thing. You can't say, oh, I'm going to sell on the top. it adjusts itself based on the price action. So it's not a leading indicator. It's just a visual representation of direction. Magic. Lori, not leaving. Somebody on YouTube says everybody's looking to get short. I disagree wholeheartedly. Nobody's looking to get short. Everybody I'm talking to you is buy this and buy that. Palantir to the moon and stocks like MSTR to the moon. A worried market, or how about different word? Scared is probably too touchy feely. Concerned. A concerned conservative market does not chase MSTR and Palantir. More so, Palantir, I get it, but not valuation. And MSTR, I don't get it. A concerned market, like a market that's looking to short, those two stocks will be the last things they buy, especially MSTR. The risk appetite in the market is very alive and very well, too alive and too well, as was the fear 3 weeks ago. When the markets lost its head, I told you it's an overreaction. You said tariff this and tariff that. And I said, we've seen this movie. And I forecasted everything that was going to happen. I said, we're going to have freak out moments. We're going to have Trump call for rate cuts. We're going to have Powell be quiet about it. And they're going to pin one against the other. They did that. I told you that we're going to say that we're dealing with China, and China is going to say, no, we're not. And China is not going to back down on anything, and neither is the US, and the tariffs will go into place, and nobody will worry about it. A few months from now, we'll forget and move on. It all played out exactly the same. So let's go back to trading, fundamentals, and charts, and financials, and some headlines if you want. But let's not. These days, we don't do anything without a headline. It's like, what do I do? Buy or sell? I don't know. Where's the next headline? How about you look at the company financials and you decide if it's time to buy it or not? Can we do that? So let's look at the S&P financials. Are they cheap? No. So it is not an obvious point of entry for the S&P as a statement. Forget the targets and the upside and the downside and tariffs. The company of the S&P is made up of 500 companies, 501 tickers because of Google. What is their P&L worth? What is the valuation? It's 50, 60, 70% too expensive relative to recent history. Okay, so it's not an obvious time to invest in it. You can own it, you can take a small bite, but you don't assume that this is a base from which we spring to high heaven. Fair enough statement? I don't need a chart to tell you that. It's just pure simple logic about the company called S&P. You don't short it aggressively. You short rallies into resistance areas. You're trading it. So there's none of that now. It's like headline this and headline that. Yeah, well, today Bitcoin is not going up and MSTR is. Corning, GLW, I don't know enough about it. I used to trade GLW when it had decent options action. Have you done your homework on it? So I can tell you that the buyers love it as it approaches 42. So you have a good base there. From a trading perspective, instead of buying shares, I would sell puts in that. As far as price action, rally, sold, new low, rally, sold, new low, rally. What if they repeat sold, new low? What if? That is at risk. It's not forecast. And also, support, battle zone lost, coming back into it. Not a place to start longs. Whether you like it as an investment or not, you're chasing it into a prior fail. Maybe I would sell a put spread to start a long as opposed to buying shares or buying calls. I definitely would not buy calls. 100% confident of that decision for it not to be wrong, even if I miss out on some upside. I'm concerned at how the TLT is breaking out right now. Let's look at the logic there. That speaks of expectations in the stock market that are unreasonable. So the TLT, if I'm long the TLT, I would exit here. Now, I'm not an expert on bonds, okay, which is what this represents, the price of the long bond, 20 plus years. But I can tell you that this is a resistance area. Okay, so that's one level of resistance. I bet you there are more. Okay, what is this orange box? PPI. So this whole area is resistance. So I hate to be repetitive, but this is, I won't put a shadow on it. So the easy upside is played out. So my concern is a breakout in the price of the bond signify a crash in rates, a severe drop in yields of the bond. That is a fact. It's 1 to inverse 1 relationship always. Always. It's not like maybe sometimes a little bit, not always. That is a mathematical fact. Price of the bond goes up, the yield goes down. So it signals rate drops. So you guys, can somebody go get the odds of a rate cut in June? Have they approached 80% again? If they have, I can tell you I would short June because they are building a potential letdown. I don't understand why would he cut rates in June? Somebody please, before Tom was busy, he used to converse with me on this one, but I don't think he's here today. He justified the rate cut last time, and then I think he admitted that it was a mistake. Can you justify a rate cut based on the scenario in the US? It is 58. Okay, that's good. Coin flip. Why would he cut rates? What are we doing? I don't understand it. I can justify it from a political perspective. And if he cuts rates, then Raghu has to admit that the Fed is political because there's no economic reason to cut rates except to lower the dollar, which is a political move to help with the tariffs negotiations. I don't know why we would cut rates. Usually we used to do a QE when we had, the financial crisis, a crashing Christmas, a shrinkage in the economy, maybe no inflation. Like for a period of time, we needed to get inflation. They couldn't get up to 2% inflation. Remember that? We're trying, it's not taking hold for some reason. And they said, maybe we're measuring it wrong. Those are conversations we had not too long ago. We cannot get inflation up to our target. These are conversations with the Fed before. So they were cutting rates and buying, but Let's get the inflation going. They were avoiding whatever that comment was. Like they wanted the Goldilocks scenario. And then we went too high inflation because they did too much. And then they're talking about the Goldilocks scenario as we're coming down from the top, which is why I said, stop doing anything, Fed. We will handle everything. Just let the market price where risk needs to be. If something is too scary, people won't go into it. And if they do, they get hurt, they stop. That's how markets work. You put your hand over the fire, you get burned, you take your hand out of the fire, you don't try it again. If you don't bail them out every time they break something on Wall Street, they keep breaking something on Wall Street. Inflation is manageable. That's a big if. It's possible to cut a rate cut, but what is the necessity to cut a rate cut? What labor is fully employed. We don't have an unemployment problem. We are fully employed in the US. GDP is still positive. All companies are breaking records in sales. Where is the stress on the economy? And then in the bond market. If you want people to buy bonds, you would give more reward. So that's going against stresses in the bond market. People tell me that China is selling bonds. So if you want people to buy bonds, you pay more. The bond price drops. You reward more. So, like I said, I'm not an economist, but the Fed is political. So we have a potential breakout that would take us to 554.50. Let's see if we can find it. It's not showing its head. It's hiding. Let me bring the XLZ back again. XLZ. It's not obvious they can break out. So if you bought a put for a small dip down to 551.50, I'm okay with that. If it pops, you can buy a put. So anywhere in here is okay for me to own a put. So what put would I buy? At the money put. The 553 put for today's expiration is still viable. It is 1.24. That's too cheap. What? Oh, that's a call. $1.89. The 553 put is $1.89. That's also too cheap. Anyway. Unemployment is rising, but we're still fully employed. Down we go. Close your put. Close your put. Close your put. I love this job. I know. It was too fast, Raul. Buy a put. Did we just start transition over to simple stocks? Wow, you be fast. We're already in stagflation. That's my take because the GDP is already negative. It's just not being reported the correct way. Anyway, the economy is a moot point. I'm saying if the Fed, everybody complains about the Fed, it does too much, it's too late, it waits too long, or it acts too soon, or it takes. They don't know what they're doing. So if I go to a surgeon and the surgeon keeps messing it up, I stop getting surgery. I deal with what the problem is on my own. That's my statement. Nobody could argue that the Fed is amazing. I haven't heard anybody say that. I've heard everybody say, "Oh, it's too late. It's too soon. They do too much. You don't do enough." They're always overshooting. They stay too long in the position. So if all these are correct, that means the one thing that is an emphatic statement, the Fed is not very effective. They don't know what they're doing, and they cause harm often. So stop doing anything. I wish Buffett would come out and start talking about it. Is Milton Friedman still alive? Forgive my ignorance. Chris, nobody hates the Fed except me. Is Friedman still alive? He seemed like a guy that could explain it plain simple. He's not? Bummer. 2006. Oh my gosh, I'm way off. You know what somebody said is there's shrinkflation, which we haven't talked about it. Thank you for the update. Like things cost the same, or maybe not, but they're smaller. Shrinkflation. We have a lot of that. You get less for the same money. Like with bottles, like if you buy a soda bottle or a wine bottle, they'll put a dimple underneath that's deeper than normal. Somebody showed a thing of gum. I forgot which one. Stride. You know how it comes a sheet of gum and they're like individually wrapped like pills. They say a handy corner to grab, which means one fewer gum things. So yeah, now you have a place you can put your thumb so you can get your things out. That means they replaced one piece of gum out of every packet. New convenient way to grab your gum case. Oh, Linda. Oh my God. That is not a dad joke. Unauthorized dad joke. It is funny as hell. Oh my God. Thank God it's Linda and not Tom. So I've heard. Chris can attest. Ooh, what? He's okay. He drives a Lucid. All right, we got to my line exactly, right? Okay. So stay in your put because if the rally doesn't break out of 552.40, you might get 551 flat. And if you get 551 flat, you might get 550. It's worth staying in the put. But if you want to scalp it, scalp it. How much is it now? It's like $30 or $40 profit per contract. This bounce here is important for the bulls to come out and beat that prior fail because then they get the high of day and then they can get going. But if they don't, they're at risk of going to the lower end of the orange box, which is fine. So what I'm saying is maybe this, what just happened, maybe it can repeat. Question: is it more normal to let credit spreads go to expiry? David, ideally you want that, but in this environment, take your money and run. I'll give you an example. If you have a credit spread and it's down too cheap now, so the entire thing is a risk now. So it's $5 to close or $10 to close, and you're risking $100 for $5 or $10. It doesn't make sense to keep it open. Close it, and we will redo another trade. Longer term, it's easier to get to maximum profit. And if you catch a correction like we just did, those are the easiest ones. It's a no-brainer for me to let me rephrase it. If you've been long enough, have you been a member for a bit? And if you have, then you had seen me sell a put, for example. I will take the most ridiculous one, the NVIDIA put. 22 days ago, we sold a put for December, collected almost $400. It's now $140. It is locking up a few bucks, not a lot. If I need the margin, I will close it. I will buy it. I will pay $140 to get that risk out. I would have locked $245 per contract in 21 days. Outstanding trade, but that is in my account. I wouldn't close this because it's an extra $141 and it's not locking up more than $350. So risk to opportunity still makes sense. 140 divided, let's round, by 500, it's X percent. It's still super juicy. So I would keep it in place. But if I'm scalping intraday and I'm at risk of going to maximum loss on a headline from Trump this and Trump that, I would pay the money to get out. So there's no one rule. Don't make it a goal to go to 100% profit, so you don't put yourself in a position to make that decision and then get stung. You understand what I just said? Okay. All right. So the bounce here is normal. The attempt is to get out from that little failure that they just did, the red circle, if you want. If you go above the red circle, now you challenge the high of the day, which is the overnight high. And then you become looking up to 555. We look at the soldiers to see who's looking primed to do that. These guys are still stuck inside of yesterday's range. These guys showed some extreme willingness to go, but then they stopped. But I respect them. So I go back to trading the range of the day. Look left on my screen. The orange box is the range of the day for me until it's broken. The VIX is at a place where if it loses support, it loses a lot more, which fits with the logic that if we break out here, we can go a lot more. So this is a drum roll moment that's probably going to last about 10, 15, 20 minutes. Trade idea. How about shorting IBM? It's almost 1.2% today. Credit call spread for July. IBM. I don't mind it. I think they reported already shorting IBM. I have to check the chart. Okay. Okay, there was a bearish setup from here that didn't play out. That concerns me for the bears on the SPY. So keep the parachute close. IBM. Danger, Will Robinson, bearish wise. Yeah, I don't mind. A short on IBM, I definitely don't mind. You're saying 265, 270 credit call spread. How much does it pay per contract? $60. Yeah, that would fit my profile. If you're taking a lot, like if you do 20 contracts, you should do 5 or 6 or 7 credit put spreads too. I don't want you to take 20. I don't know how big you trade, but if it's a large short, make sure to hedge it a little bit. So it wouldn't be quite an iron condor. It would be lopsided, uneven iron condor. Yeah, okay. That's good. If it's only one, I can do it in my. I want you to know that IBM has a lot of fans on Wall Street, the stock. I don't know what it is. They freaking love it. Let me go see if I will take it with you. July. When is their next earnings report? So must be Can we go June? June will be 265, same level. You collect more for the less for the June than the July. July works. How about you go to 270, 275 and collect $50? Let me see if it fills. Oh shoot, it fills too fast. Don't take the July 270 and offer more than what I did. I think it'll fill over 50. I just sold one for July IBM bear call spread, and it filled like in an instant, and it got me at 48, which means I left money on the table. 270, 75. It's for 60. No, that's not what I see. Hold on. It's quoting 53. So offer 60. Ask for 60, and if it doesn't happen, lower it to 55, and if it doesn't happen, lower it to 53. If it doesn't happen, lower it lower. Yeah, bear call spread for July expiration, which is the 18th. That's not my idea. I'm just piggybacking on somebody else's idea. I want to tell you that this company has a lot of fans on Wall Street. So if you want to turn it into an iron condor, that's perfectly fine with me. So you sell a put spread. The put spread would be at 205, 200, and then you would collect another $60. So you would collect $110, $120. That's more than 25% reward on your risk. That would be a balanced approach. I can't stand the company. I think it's overpriced. It's overrated. Not overpriced. It's overrated. And but it does have a lot of fans on Wall Street. This is super bad news for the Bears because they let them have that line without much of a fight. I mean, it wasn't even competitive. It is still a short from here, but now we're playing with fire because the VIX just made a lower low from the overnight low. The VIX future is nowhere near that. So there's that discrepancy. This might be a bull trap. Don't buy calls here. If you're in calls because you've been in calls, that's one thing. If you're getting into calls right here, you might be getting trapped on a pop. So hold on. Drum roll here is very important. This might repeat itself. Let's see if it does. And then this after that. The VIX lost it. The VIX futures, unless I have the wrong time frame. Is it 2354 on the VX? It hasn't moved in a minute. Let me see here. Do I have VIX futures? Okay. They're pretty close, 2353. So this is the VIX futures, and this is the VIX. The VIX made a low, and the VIX futures has not. Who's right and who's wrong? Okay. 553.55 is the high from yesterday at the open. That was a big fail. Taking that out is a burst of energy. Now, you should also at the same time watch 5578.75 on the ES. So it's these guys that are doing it. Once again, the XLF, the XLV, and MSTR. To the moon, MoFlicker, to the moon. TLT not stopping. So bond market and the stock market are hand in hand today. I would buy the put again. I would buy that put right now. 553 put, $130 expiration today. Why so cheap? They're looking to burst. Buy the put and stop out if it doesn't work. I'm trying to see if they're going to behave correctly this time. Do that red thing. From here or from 553.50. I think it's worth it. Why so cheap? Because the VIX is lower? Maybe. Okay. Gamma exposure. 555 is a high magnet, and we are way below that. My screen also says the magenta colors are higher on the S&P, which also looks at 555. So the gamma exposure is consistent with Trady Ticks. The downside pressure is about $1.50 in the SPY. It's about $2 on the XSP. It's about $1.50 on the QQQ. There's no downside pressure on the SPX. So yes, anything above here will take hard work from the bulls, but they're doing it. The small caps went to that number I told you about earlier. So this is another day where the small caps go from deep red to super green. A basket of 2,000 stocks. But the difference between that today and yesterday is that today's range, the entire range, as wild as it is, it's baby and inside of the range from yesterday. In fact, there are two ranges from yesterday. It's inside the range. So coiled, and it'll snap out of it in violent waves. Up or down, we don't know. I'll give you numbers. 1950 on the RTY. If you know what I mean, you know to write down that number. It's very easy to remember. 1950 versus 1985. If you get to 1950, you better hold it or you're going to snap lower in a violent way. And if you explode from yesterday's highs, which is 1985, you might have $35 of upside, which is $3 to $4 of IWM. Where is the IWM? That brings us to 200. So 200 to 208 has been pivotal for years. We keep fighting over them. It's hard to be bearish. It is really hard to be bearish because good news is good news, bad news is good news, headlines is good news, tweet this and tweet that. Whenever they decide that they're happy, sentiment, everything is up, 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 regardless of what the news is. Whenever they're freaking out because they're told that it's scary, they sell everything with no regard for valuation. That is an emotional market. So you better be on your toes with the short-term bets against an emotional market. Notice a lot of my trades are longer distance because I don't want to be in the mosh pit. And if you're actively trading, you better have good stops. Okay. Iron Condor for today is still viable. So the upside is not pricing in yet either. Okay, so I said the put is cheap. That should scare me. Still $134, $138. But the credit call spread is not expensive either. So are we range bound for the rest of the afternoon? We'll find out soon. Who's reporting tonight? I have so many tabs open, it's funny. Okay. Oh, Visa, Starbucks, First Solar, Booking, Caterpillar tomorrow, Humana, Western Digital might affect Micron, I think. GE Healthcare. I'll be interested how the market reacts to that one. International Paper. Believe it or not, that's an important company for Amazon. Looks like a rising wedge is forming on the RUT. Well, yeah, just like the descending wedge that turned up later. So watch my bottom right-hand side of my screen. Remember this? I drew these yellow things. I said, that's what happened yesterday, expect a spike. I said, this what happened yesterday, we spiked. This what's happening today, we could spike. It played out perfectly. Okay, I have a down arrow from the divergence between Bitcoin and the SPY. Let's see if it works out this time for another dip. Never did I ever think I would be looking at that relationship to trade fast intraday. The last one we had was overnight and it yielded results. Could be a coincidence. We'll see. If you're new and you see me say, okay, I would get into a put and you're confused about which put and whatever, this early in the day, I would use puts in the SPY. It's very liquid, it's the cheapest. And today's expiration. Make sure that your account allows you to do that. Don't buy something you cannot sell because you're under PDT rules. So this early in the day, still, I would do that. Later in the day, we usually suggest using next day's options to trade today because they hold their value a little bit better. Booking diagonal. Maria, I will look at all these earnings late in the day. Booking is such a big stock that it doesn't have a lot of option action, and the bid ask is so wide. So I will be surprised that I will suggest a diagonal, but I will look at the options later in the day to see if they're giving us a hint. Like with Spotify, they gave us a great hint. Okay, let me check on the Spotify trade. Some of you took it and nobody's reached out. I'm flabbergasted. Whoo! $1,200 in profits on the big one. $350 on the small one. So the small one, I think, risked 200 and some dollars, and it paid 300 and some dollars. And the big one yielded $1,200, $1,170. I would not be in that position anymore. So the forecast was bearish on Spotify. I said it looks easier to fall. And I said something is going on at 580. Look at where they died at 580. So because price is inside this yellow box, that was the small iron butterfly. And it's inside the larger box. They were $50 and $25 wide, placed where they are right now. I would not be in this position right now. I would not be in the Spotify position right now. Anybody that had the guts to take it, which not many did, you guys should be out of it. You're leaving thousands on the table, but you just made a lot of money. Do not be in that position. You risk assignment overnight. You're short a put that's in the money. And that is a massive stock to be assigned. It was yesterday at the close. Those earnings trade setups is at the close. I did not issue a credit put spread. Somebody wanted to trade Spotify somehow, and I told them, okay, you're making $30 on that last put if you bought the last put I mentioned. If you still own the other put, I don't remember the price, so manage your risk accordingly. If you're getting your money back now, maybe you want to exit, because now they're above these yellow scribblies, which are at 552, and they're a bullish market. That is what they usually call higher highs and higher lows for today. Remember this? Descending channel is no longer there, right? Yeah. So I forgot where we did it, from here to here. So if I move it and say, hey, include the whole day, now we're slightly bent up. I'm going to delete it altogether. So we were not selling rallies, the answer, because we went over the circle and confirmed it. And now the circle is support. You see that? So bring me back below the circle to believe you that you're going to do the yellow. Let's make this different color. Orange. The orange path is still available. I just cannot believe it's possible as long as we're above the red circle. The VIX futures is the only thing that tells me the orange path is doable. Tomorrow is tomorrow. So the VIX value may be weirded out today because tomorrow is options expiration for the VIX, and you cannot trade it on a Wednesday. So today is the last day they can trade the VIX today. So the quotes might be skewed. I'm trying to find us a trade that has sustainability. Like a few days ago, I said take a trade based on a 15-minute chart and it played out beautifully. It was a bearish setup. I don't have easy ones right now. I don't. Short-term ones that say, okay, 551.80 is doable. They hit target 1. Target 2 is 551.80, which is starting the orange line. The Iron Condor is at 50 or 40% of maximum gains from this morning. That is an amazing piece of news because we are trading my range, the orange box. Okay, now I have also a bearish harmonic. So if the bulls don't make a higher high right now, we're pointing to 547 ES, 548, 5548. That's $20 lower. So that's that $2 of downside pressure in the SPY. That's all saying the same thing. I'm not raising the alarm bell. Everything is starting with the word if. If the bulls don't make a higher high, then they're at risk of drifting $20 lower. The gamma pressure is up. The options pressure is down. So, the drum roll continues. They're taking your money. Who's you? Anybody that's buying based on, not based on science. So a lot of you here, like Linda, trades based on a set of tools. She's very consistent. Ryan has his tools. Corey has his tools. Everybody that shares trades here, they have a set of tools. They're not winging anything. So find your tools. I talk about half a dozen of them here every day, all day, incessantly. Ask questions. Join the seminars. We have room in the seminar in May. This is your starting point. If you want to see what the pros do live for 2 days and have the opportunity to sit there one-on-one, hello. And it's Vegas. You get the gamble at night. Trade at night. No gamble. Wait, trade, gamble. Ooh, the line is blurred sometimes. Come in May, double the fun. Come in May. The market's open at night in the casino. Come in May and find out what you need in order to set up your year of learning. Craps. I can do an Iron Condor on a roulette table. I think. I have to research the exacts of it, but the setup I think there are 2 or 3 setups that do it. You take a bet that pays in all scenarios except a few. That's the idea of an Iron Condor, right? If this doesn't happen and if this doesn't happen, everything else pays. If I remember correctly, I don't have the table memorized. It's avoiding the left and the right and the zero. I forget the digits. You risk 500 to make, you risk 800 to make 500 or something like that. So it's a consistent payout with relatively limited risk with high odds of success comparative to a coin flip. Like the Iron Condor pays you 20%, risks something moderate, has good solid odds of success that are way better than a coin flip. I don't know the name of it. I read it one time. I was like, ooh, next time I go to a casino, I think I'm going to try that. But I haven't been to a casino. I can't stand casinos. Maybe it's the auditory bling, 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 bling. Am I expecting that orange path? That orange path is possible as long as the VIX futures don't break down. Expecting it, I expect support in that circle. If they lose the circle, I expect support at 552, which are the yellow lines. Yes, the orange is possible, but the risk appetite is super strong. So the VIX down 2% is not representative of the upside hope that people have. I can have a whole class on it, what I mean by it. The easiest way to say it is for as long as people are buying Coca Cola at the all time high, waiting for the market to bottom, there is still a schmut ton of hope in this market. So that's risk appetite, super strong. So, yes, it is possible, but it's difficult to accomplish. Hi, George. VIX July 19 calls as insurance at 590 with a stop loss at 5. Do you think it's a good idea to roll? Okay, so I'm a little confused. This is a good conversation for everybody else to hear. Can you hear me, first of all? The person asking about the VIX? Okay, so the question is, and I'm going to read it verbatim. I bought July 19 VIX calls as insurance for $6. I'm rounding. And a stop loss at 5. I'm going to stop right there. What do you mean? They're designed to go to zero. When I buy insurance on my car, do I put a stop loss on that? Say, oh, 30 days into this insurance property, I'm going to sell it before I lose all my money. Maybe you didn't buy it as insurance is what I'm pushing back on. So can we revisit this before I continue reading the message? Did you mean that if they drop to 5, I will close them and reopen them somewhere else? Okay. Then I will finish reading the message. Do you think it's a good idea to roll all 6 to an August 14 call? July VIX calls are still fine. I think that's what you're asking. It's long out enough in time. I think that's what you're asking. If I had those calls, I wouldn't do anything today with them. Sit tight. It sounds like you might feel like you have too much insurance, then sell one. What do you mean you don't have one? Oh, I'm talking to somebody else. Well, do you need insurance? Do you have a portfolio at risk? The VIX, okay, so the VIX calls give you protection against the holy schmut moment. For example, when the VIX went up to 45 or 50 or 60, wherever we just crashed, we bought them at 14.5. Your portfolio must have been red thousands, but you had thousands from the VIX position. So that would cover you. But they're designed to go to zero. You're not hoping they make you money. They're hoping they die or allow you to stay in your position. It is not a no-brainer to buy VIX levels at this level. Okay, like we traded it as a foolproof trade when it was below 15. I said, this is how I know the market is too bullish. Before the correction, there were some people in this room. I can name names, but I won't. There are some people in this room who are so bullish that they wouldn't even consider taking a bearish setup that was risk-free. So this is not the case right now. Buying VIX calls now is for protection only. That's okay. Let's see here. No, there is no set schedule. Every minute counts the same way, but so the theta decay schedule is tick tock. That's the schedule. But the rate of change accelerates a lot faster late in the day. So the way I say it, in the last hour, it's Adult Swim only. if you're trading 0 DTEs. You see this consolidation? Is it ABC down to 52, 51.8? If they get to the bottom of the circle, yes. Then they fell from the 553.50 down to this sideways consolidation. Very tight, very nice, orderly. The VIX is falling, so why aren't they just bouncing and breaking out? Let's do this. I think we go to 547 today. That's my take. So it's worth holding that put, even if it produces a loss. I think this one wants to trap door open. Headline this. I think we go to that dashed orange line or lower. What did he just say? If we don't break out soon enough, I think we're tired. I wouldn't hold calls with confidence. How about that statement? They need a breakout. They need to just break out. Otherwise, the longer they hang out here, the bigger the odds that these rising wedges play out. Like they're giving the VIX to time the base. The small caps made a higher high than the overnight high. That's a statement all by itself. Let's go look at the head. Okay. This is an active trade, not a load up the bus trade, okay? So the scoreboard is plus 0.3. Once again, I look at this chart and it doesn't inspire plus 0.3. Where is the green? Okay, so let's see if I see it better on the NASDAQ. Boring. Okay, let's see the Russell 2000. That's the IWM. Up plus 0.5. I don't know. It's just that weird stuff going on. Okay, so they broke out of the consolidation. Another push to the upside. IWM for the day is downside move. No, the IWM, I forecasted an upside move and it played out to forecast, unfortunately. And they haven't, they're this close to the actual target of it, and it was pointing to the freaking sky, and they went for it. I drew it, and I was like, I hope they don't do it, but they did it. Because I knew they would be doing it behind the XLF. This is why the market is rallying. Watch this. Middle right. The XLF is going to the moon, Mo Flicker. Banks. That's where it's at. Banks. Who inside the XLF? I don't think it's Berkshire. Still modest. So in a tech rally world, the banks continue to lead the rally. I said it when we were at the all-time highs. I said, this has no business leading the market when it's a tech rally. When you tell me it's about AI this and AI that, we're going to change the world, why are stinking banks leading the rally when you can't catch a bid for frickin' NVIDIA, which is the gods of AI? It doesn't jive. 1 + 1 does not equal 2. Wall Street expert, AI rally. Wall Street behavior, no money in AI, bank rally, and crypto rally, and Coca-Cola rally. Two solutions. One, super spikes from NVIDIA up to 180. That would fix everything. I would shut up about it. Or two, another market correction, maybe even deeper than the first one. Hope is not dead. For as long as there's hope, there's money to be made on the bearish side. Is this the last meeting, Nick? Online? No. The whole week we're here as normal. Next week is not normal. I am in credit call spreads in BKK. Somebody's asking me if Berkshire is still a short. I just don't remember I don't know which ones they're talking about, so I'm pushing back and asking. I would still be in puts, yeah. As long as they don't make an all-time high, I will be in puts. Somebody's getting set up. And the credit call spread is not super hot. Why not? I think it's worth it. What is it, $130 risk? It's still profitable. It's still $25 profitable, that last one up here. Oh, yeah? Somebody did. I sold the... What are you thinking? What happened to IBM? Did it fall? Okay, so that put is $50 per contract profitable. That last one. The first one, if you're in it and you just got your money back, I honestly don't remember the price for it, so set me straight. We're back to the same thing, except this time they lost the circle. Why? Why would they lose the silly circle if they were setting up the bears? We'll see. I mean, it's possible. Anything is possible. But there are a lot of question marks with this burst. Who's leading the XLF? These guys are pretty quiet and they have the most reason to explode. So I am not bearish this week at all because we're going into an earnings season of the best companies on the planet. Let me say it slowly. We are going into the earnings reports of the best companies on the planet. I am 1000% confident. I have no shadow of a doubt in my mind that the reports will be amazing this week. So it's hard to be bearish going into that, but it's not about quality. It's about how they react to that quality. Okay, we beat that concept to death. This morning we did too. I'm not going there. You either get it or you don't get it. Or let me rephrase. You either believe it or you don't believe it. And it's up to you. I have proof, mathematical proof to prove my point, but I cannot force you to understand it. So the reaction this week is still a coin flip to me. But it's hard to be bearish. So if you want to be bearish this week, like threw money in this week, like buying puts for this week, selling a call spread for this week, you better have a damn good reason to do it. Otherwise, step out in time, give yourself some breathing room. So if you're wrong, you're not blown out. You can stay short for this week, but use next week's. At least give yourself some room so you don't get pinned against the wall. Microsoft reports today? No, nobody. Starbucks reports today. I posted, go read the morning note. You can get a picture of everybody. Tonight, it's Starbucks for sure, and I don't remember the rest. Thinking of selling a credit call spread on 5.6, 57.20. SPX, $70. Okay, that's fine. 13 delta is fine. Thinking of selling this today and then adding a credit put spread on the drop. Okay, what if they don't drop? Do you have a plan? Do you have a stop in mind? Do you have a defense in mind? Is your portfolio bullish? If you own longs on stocks, that would be a good balance to your longs. Somebody asking if they can sell a bearish call spread for May 6th. I want to caution you that the Fed speaks like a day or two before that, a rate cut decision. So either come closer before it or way after it. Yeah. Ooh. Yeah. I have that. I have that same thing, but I've closed it or am in the process of closing it. I think I closed it. Where is it? SPX. Yeah, I did close it. So I remember I did one time a 5.6 credit call spread when we were rallying, and then I said, somebody told me that we are going to have a Fed event just before it. I was like, I better get out of that way. I closed it for 60% or 70% of max gains, and I reopened one for May 1st. And I closed that one too. Consider me out of that one as well, because it too paid 80% of maximum gains. So I'm not interested in picking short-term fights. I respect this bull. Thank you. Visa, that was the other one. Are you sure Visa's today? I respect the bull. Yeah. Too much for me to stand in his or her way. Well, the bull is a he. To stand in the bull's way this week. We have too many potential catalysts in either direction. I am confident buying the dip once it comes. I am not confident shorting the rip before it comes. I will short the rally, like I said this morning. So let me go read my morning note. You know how they have it. This is something. This is something that you will learn if you sit with me and with Mert next week as to how we think about things. What is my trade sheet? What is my daily? The other day I posted a real trade sheet from a real trader. Somebody said, this is a joke, right? Because it looked funny. But guess what? Joke's on us if we don't do that. If you don't have a funny looking trade sheet, you're winging it. And you might win here and there, but you would win so much easier and more consistently and better if you actually had a piece of paper you worked with every day. That person literally has a printed blank next to the computer that they fill out by hand before the market opens. I do this on that. I do this on that. These are my levels on this ticker and that ticker and this ticker and that ticker. And sometimes they have no levels. They just skip that ticker altogether. Oi. It's not bad. 2 people sharing information is better than no people sharing information. So I'm good with that. No need to apologize. Why not review the NQ as well? Somebody wants the NQ. I'll give you NQ. You want your NQ? I'll give you your NQ right here. My forecast on the NQ this week depends a lot about outcomes of reactions to earnings. I'm speaking to somebody that's not here. Yes. So there's going to be a violent move on the earnings reactions, but without the earnings, the NQ is at risk of a fizzle. We'll see. Similar setup to what you're seeing on my screen with the S&P on a much higher time frame. Okay, the put is up $40 again, $45, $51 and counting. The bear call spreads are paying. Ravi, I saw a question from Ben. If you're here, this is the best place to ask me. I did not see you ask a question over there. I missed you. What is your question? I spoke to a Ben. You're not a Ben, unless you go by Ben over there. CrowdStrike. Okay. CrowdStrike. What time frame? You said, did you see my question on YouTube videos? Okay, no, I'm here all day, every day, dude. Come to me here, and you get me answering like long, yes, but what time frame? Like long for a week, for a month, long in general. You're getting invested in it. 2026. Are you already long? No. This here is not an obvious entry point in general. So if you want to consider going long, I would sell a put to buy shares if you have enough money to buy 100 shares. Or I would sell a put spread to be long without needing a rally. As an investment, this here on CrowdStrike is not an obvious entry point. I know this because we looked at it this morning. In fact, I would sell you the calls you want to buy to a degree. Not exactly right, but okay, we're up $80 per contract on the second put. I don't remember the price of the first put. It must be back to even. So if you've been stuck in the put from earlier and you're green, you should exit. I'll say it again. If you're stuck in the put from earlier and you suddenly got green or even, you should exit at the risk of missing out. The only reason you wouldn't exit is that you were fine with the loss. I cannot guarantee you the red circle, but I think it's doable today and lower. So the put will pay a schmut ton of money. Okay. But proper risk management is based on your risk appetite, not mine. I don't say stay in the put too many times. And we're up over $100 per contract. The day is done. 300 smackers. So we got the orange move as well. We got the red move. The red circle was the pivot point. They tricked us. They trapped some bulls. And now they're trying to maybe work on the bears. The $20 of downside on the ES is unfolding. The downside pressure on the SPY is completely relieved. Look at the stream on Discord. You'll know what I mean. The gamma was lying, or it might still play out, but the gamma pressure was lying. And now the gamma pressure on the Qs flipped bearish, but not by a lot. Something just changed. Tradietics data just went wacko. Cha-ching. Ooh. That was a nice setup. Breathing. Take a sip of water. Whoops, I missed a message. Dang it, this freaking phone. My YouTube videos are private and not playing. Which ones? If it's private, it's Nanya. I don't have the one from yesterday. Yes, I made it private on purpose. The one from yesterday is private and staying private. Put spade so quickly. That's how it works. These are fast trades. I may get kicked out in about 20, 30 minutes. Shorting, you're not crazy, no, BC, no. But you should know that it is a crazy company and it's a solid, fundamentally solid company. So you're shorting the momentum of the stock market in general and one of the chiefs. Okay, let me use the analogy of the lionesses. If you've watched the Nature Channel, you will find lionesses chasing a herd of gazelles, and they will focus on the one that's limping or a baby just to caress it once it catches it. It's not going to kill it or anything, just to caress it. They don't chase the one that's jumping up and kicking. Just there are easier things to short out there. But yes, it is shortable, but only because the market is toppy. On its own, leave it alone. Let me see if my forecast of 547 is still there. Yes, it is. It's a long shot, but heck of a long shot. If not today, by tomorrow. So what time is it? I wouldn't buy a put here. I would definitely book $150 in profit, like there were. But let's say I had 5 puts and close 4, and I can leave one. I would. If we finish the orange squiggle, I'll put a marker. If we get here, we will probably get here in a redo of this. And then that. So now onus is on the bulls to retake the problem area. All right, I'll be right back, folks. Whee! Yeah, I'm glad it worked out. I don't pound the table often. Let's see if there are bounces, counter rally bounces. Okay, so now the bounce has to hit the underbelly of the yellow and the green line. So 551.50 and above is where they need to, where the bulls need to overcome. So they want to retake that circle up there, that tiny circle. Otherwise, we're selling rallies right now. Yep. I say the same thing about that other company, TTD. Went back to red. Let's see. I feel like I need to buy something to protect myself. May? How many days on May 17? $400 for May? No, ain't gonna happen. Although that includes earnings. June? June, $50. Yeah, June. So here's what we can do. Buy a June 52.50 put or 50 put. Sell a 35 put, 40 put. Okay, 50/40 debit put spread for June on TTD. Costs $270. It doesn't protect your sold puts. It moves it down. So now you're short a put at 55, you're long a put at 50. You're losing money if that happens, but you limit your losses and you move everything down to 40 at a cost. Shorting the XLF is pretty risky because they're committed to it. Every time something happens, let's buy the XLF until the until Nvidia stabilizes. And like, wait, what? What? Well, I'm not defending it with a debit put spread. I'm moving my lines. I'm giving myself options. So I'm short a put at 55. I can buy it now and suffer a 14% loss. I can buy a put below me and do nothing else. That limits the losses. I don't want to carry it down $20. That's what I don't want to do. And limit the losses. I can buy a put and sell a put to limit the price of the defense and limit the amount of protection I get. But I think I'm okay with that. So I could probably sell a put in the week it's reporting earnings to do a diagonal. What is Shake? I'm afraid to click. Shake Shack? Okay, I think we hit the target. I said a downside target on the ES from earlier. I said if they don't break out, there's a bearish $20 dip or whatever number I met. We hit that almost to a penny. So the targeted move from the wolf wave that I mentioned earlier has been reached. This here, me saying 547, is a different ticker of the S&P that says a higher time frame on the S&P, sorry, that says lower over the next few hours, whether this today or tomorrow, I don't know. If this is your first time here, speak up. There's so much to tell you. Okay, the XLV, I think will go to 139 today and 138.3. And maybe by tomorrow we'll go to 137. Those are three bearish targets based on a harmonic. They can erase that by making a higher high today. Let me rephrase. XLV. As long as we're below 140.8. This one. As long as we're below 140.8. At risk. So I would stay short all the way down to 137 if I wanted to. I wouldn't straight up buy a put, but if I'm in a put, if I'm in a call, I would, heed the warning of potential downside. If I'm in a put, I would stay in a put. If I'm buying a put, I should, watch the next, maybe buy the next bounce or take a smaller bite if I've never traded the XLV. I would use this week's contract, not necessarily. I don't think it has anything shorter than this. I have to go to lunch and run errand. I'm super interested in. Okay, we can look at Beacon, but it will be missing some action. The implied volatility is double the normal ish, not very high. $283 priced in. You see, you can count on the hands the price action. So let me go to TradyTix to see if I can help you out from that. Even though you can count on your hands the price action, there are millions of dollars at stake today. Bearish 5. Wait, that's not it. Never mind. That's twice in a row I do that. Oh, I just typed price line. There's only one thing that matters. I kid you not, one box of data, 5,400. What? According to TradeTix, there's only 210,000 at 5,400. I'm intrigued. Let me go down to 5,400, up to 5,400. What's going on there? 5,400. That can't be it. Two calls? Two calls? Yeah, that's horse bucky. There's no data. You're guessing either way. So an iron butterfly will probably be your thing. If you're interested, I'll give it to you now and set it in the middle of the range. I don't know why I would do anything different, but it's going to be massive. So BKNG. Or a credit call spread and a credit put spread may be a combination. Hi, David B. I appreciate you. I have not taken the trade on TTD, but feel free to take it. I don't want anybody to lose thousands based on my recommendations. So if you feel like you need protections, it's okay to lose $400 or risk to lose $400 to protect thousands. So the simplest thing to do on TTD is to just buy a put for June at 50 or 52.50. I'm sure to put at 55 for September. I don't want to take the risk over the earnings to be sure to put in a stock I'm not very familiar with. I should have done my homework a little bit better. It was a mistake I admitted a while back. So for me to limit my loss, I can close it now and suffer a 14% loss. Or I can a 14% loss of the risk. Or I can spend $400 to max my loss and stop the bleeding. And I could lose that $400 on a spike, which means I would lose $300, which is totally acceptable. So when in doubt, buy the protection and you can sell it. June 50 put or 52.50 put. It should be about $300 to $400. If you buy the put spread I mentioned, it should be $270. It should work in a very similar way. Here comes the party hat. Maria, are you still here? 4855. Wow, that's a big stock. I'm trying to come up with a trade that doesn't break the bank. It's nearly impossible. This is the drum roll right here, folks. Right here. The high premium is high dollars. It's not high. It's not even 3-digit implied volatility. It's just expensive. So $150 wide iron butterfly risks. So a 200 wide iron butterfly, which is 1/3 narrower than the range priced, 1/3 narrower, risks $3,800. Are you up for it? $10 wides? Okay, so you're looking for an iron condor, not an iron butterfly. Yeah, and it's not very liquid. Okay, so an iron butterfly is take it at 48.50 as wide as you want. $200 wide, you would collect $163. Yes, $16,200 to sell one. You're risking $3,800. If tomorrow we open plus or minus $200, you're going to make a couple grand or lose a couple grand. I'm laughing because these are massive numbers on a stock that is not liquid and it's not going to be easy to close an iron butterfly. So I would probably prefer a credit call spread and a credit put spread to make an iron condor. And those are going to be hard to fill, but good luck with that. I'll give you the numbers. No, I can't give you the numbers. I honestly am not going to recommend anything on that sucker. So it's just not liquid. I would step away from it. It used to be illiquid when it was Priceline. It's still illiquid. Why don't they split that? I don't know. So that more people can trade it. It's a great company. All right. So now the bulls are making a stance. They did not make a lower low. They did not get to 550.5. They better not lose 550.5. Then they finished the orange squiggle. We moved everything down. All right, it's time to stop YouTube over there. So the rally back to 552, 553 is where the bulls will be testing the appetite. Look how strong they are bouncing with the ETFs, especially the XLF. So that's what I said. I respect them. They are just insanely not scared. Look at the risk grab for MSTR, MicroStrategy. Yeah. So 5562, which is about $4 or $5 above current price, is where the bulls lost their lunch as far as volume. Okay, on TTD, I'll try to get you the trade. Give me one moment, please. Oh my god, that made me laugh. That's a word I use. It needs to come back. No kidding. No. Of course not. I wouldn't even use it anywhere but with that in this setting. Yeah. Okay, you see those yellow marks? That's a problem for the bulls, but it's also the opportunity. Let's see how strong they are. Exactly. So it's blessings. Oh my god. Okay. A while back, I said 47 days ago, I made the mistake to go long TTD based on the dip of itself. I said, okay, I don't mind owning shares, and I sold the put. And the stock did not have a chance to stabilize because then the market corrected. This led to another. the selling continued. So now I rolled it and I shared my roll, and now I'm short a put at 55 um, for September, I believe. Wait, September, yes. It's in the money. The price is 54. So I still have $1 in credit. Look at this. Look at this. Beautiful. Perfect timing. Exactly what they need. They need to skip above the yellow line. Headline breaks out. And the upside magenta color is now in check. So if they assign me shares, if I wake up tomorrow, and like if I woke up today and they had given me shares at 55 and the price is at 54.50 and I sold the shares, I would have still made $50 because I believe have $1 in credit. So my break even point is 54. I have to pay $900 now to close the bet. So I would lose $700. 7 divided by 55 or 54 is the risk to reward. The reward was a minus and the risk was that much. Not a big loss, but it is a loss and I don't like it. So I can sit tight and hope for the best over the earnings and it spikes and that's all is fine. Or it could collapse more and I don't want that. So I want to pay to close the bet or buy a put to limit the loss. Buying a put, I would choose June. It gives me enough time and it has the least amount of implied volatility premium from the earnings of TTD. Okay, so let's look at the exact numbers. So for June, I can buy the $50 put. It costs $390. So let's do the math. I sold and collected $1, and I'm paying back $4. So if it rallies and nothing happens and everything expires worthless, I would have lost $3. Manageable loss. And I could sell the puts for something if indeed it bounces and it goes to the moon. And if it doesn't, I have an exit at 50. And I collected one to get put the stock at 55. I paid 3 to get out, 4 to get out. So again, I lose $3. I'm okay with that. So that would be my plan, to buy a put and hope for a rally. If it comes, great. If it doesn't, I have some protection. I can minimize that $400 by buying that put at 50, but selling one at 40. So now the protection becomes limited. I still think it would do well if it falls towards 40 or 35, because you would still have that protection at 55, and then you would be recommitted to buying shares at 40. So you're not increasing risk, you're just shifting the placement of the risk. So that's one thing to do. This bounce, I see nothing but the XLF spike. Let me see here if I can identify that here. Mostly the XLF. Oh, though is right there. So XLI as well. XLV, I didn't see that. No, Demure. XLP, of course. So Coca-Cola, no, other than Coca-Cola. Okay. So hopefully that gives you an idea on the TTD. Okay. And just like that, they're back at the highs. That's crazy stuff. You see? Uncommitted market. Look at the VIX crashing. The VIX futures, not yet. The VIX lower low, lower low, lower low. The VIX futures holding the floor. Let's see who's right. Got to here. All right, Matt. Thank you. Let me know how I can help. Support? What do you mean support? Resistance, you mean? Yeah. I would restart the put, but now you should know that we are at a disadvantage. When these Mo flickers can do this in a minute, you restart the put if you're not in it. The same put, it is $136. The same put at today is 553. This is target one, and this no. What the heck? Where is the target? I'm going to tell you that target one is somewhere around 552.10. Target two should be at 5. Where are the targets on this thing? Oh, yeah, 551.50. Wow, I almost nailed it perfectly by eyeballing it. 552.10, I said it's 552 flat. But here's the risk now. Now that they showed when you do this, the bulls are super cocky. So now we dip, and you're at risk of doing this, and look at what's available. That is not a reason to buy a call, but that's a measured move. So it tells you if they beat today's highs, which has been a threat, now you know that they go to 556. So now we have 556 versus 550.5 scenarios. Sorry, 547 scenarios. And the bumpers are the high of the day and 550 and a half. I'll repeat. Okay. The targets are 556 or 547 for the next, 10 hours. And the bumpers are the triggers for that, the high of the day or 550 and a half. I think it'd be easiest if I just put a box. 550. It's not actually the high of the day. 553.70. This box. That's your new range. Trade this range until the edges break out. So treat it like my box in the morning. If we break out from the red, you can short one time and exit. And if we lose this, it's going down. Something disrupted the natural order of business here at this candle right there. Very suspect where they did it. You can time the headline to somebody who's losing money and needed to get above that yellow line. These coincidences are too often for you to say, you're full of crap, Nick. Am I? Let me see how many times I can tell you that exactly headlines break out where exactly they need them. This was insurmountable resistance. What's the solution? Skip over it. That's the solution. How do you skip over it? You release a headline. They have them lined up. They have 100 headlines they can regurgitate. Bam, bam, bam. And they know that AI will read the headline and react. They won't judge if it's an old or rehashed. This word with that, trade this according to that. That's how it is. So let's go down to 5 seconds to see if we can see a tiny gap. Come on, TradingView. Okay, we're stuck. TradingView is having a minute. There we go. Where are my ticks? Where's the chart, TradingView? Where's the rest of the chart? Okay. Oh, there we go. There's no gap. We went down to 1 second. They left fair value gaps, but no physical gap. Okay, we're having a moment here with TradingView. That was a moment and a half. $553.55 is the high from the open yesterday. That's the number that the machines are looking for, and that's where there could be the last bull trap for fast trading bull trap, not like bull trap forever. So market makers love to go trigger somebody and then, whoops, take it back. They do that on both sides.